So there is a difference between goods and assets. Assets are something that we are going to use in the business. And what is goods?
Goods are something that we're going to sell.
Goods is something that you're going to resell in the business. Okay. Can you tell me the 3 types of accounts that you know of?
Nominal,
Nominal.
SLCA.
real account,
Okay, real account and what?
nominal, and there's one more, ledger.
General ledger.
I'm talking about accounts. What are the 3 types of accounts that we know of?
It's nominal.
Nominal account, real account,
And personal.
Personal.
Oh, yeah.
And which account? Personal account. Okay. Every account, every type of account has their own rules of debit and credit. What is the rule for nominal account for debit and credit?
Debit expenses, losses, credit incomes and gains.
So nominal account will have all expenses, losses, incomes and gains. Do you all agree with me?
Yeah.
Okay. What does real account include?
Real account is debit, what comes in,
Debit
what
out.
goes out, and you only take the things that you can touch, feel, and see. For example, cash, machinery, and equipment.
Okay. Real account, the rule is debit what comes in, credit what goes out. And what is the golden rule for personal account? Personal accounts are account of persons. Whether it is natural person, that is people like us, or whether it is artificial person is names of companies. So what is the rule for personal account?
That it's personal.
It is
Like it can be
debit
the
the
natural or
giver
artificial.
and credit the giver.
Credit the cleaner.
Okay.
Killer no, giver.
Yeah,
Okay. Now whenever we are passing journal entries, our first thinking point would be cash or bank. Whenever you pass journal entries, your first thinking point would be cash or bank. Cash or bank we treat as which account?
Cash or bank we treat as nominal.
Shut up. Real account. Cash or bank we treat as which account?
Real
account. And the rule for it is what? If it is coming in, then what will we do?
If it's coming
Debit.
in, it will be debited. If it's going out, it will be credited.
If it is going out, then it is credited. This is the first thinking point of yours. Your second thinking point is, if owner is bringing in something, then what it is?
If it's in, then it's debit. If it's out, then it's credit.
If owner brings in money or anything, then what it is called?
Capital.
It will be capital.
If owner
Capital
is
will be
bringing
credited.
in something, that means it is capital. Capital will always be what? Credit. Capital will always be what?
Credit.
Credit. If owner brings in cash, so I will say cash debit. If owner brings in motor vehicle, so I will say motor vehicle debit. If owner brings your husband, so I will say your husband debit. But capital will be credit. Are you with me?
Yeah.
Yes.
Your first thinking point, first you will think from which point of view? Cash and bank.
Cash and bank.
If cash is coming in, debit. If cash is going out, credit. Your second thinking point is, if owner is bringing in something, you will always credit which account?
Real account.
If it's bringing something, you always credit the capital.
Why
Capital.
don't you really think and answer? There is not an award for the one who speaks first. If owner is bringing in something, then what will we do? If owner is bringing in something, then what do we do?
Debit it.
Capital credit. Capital credit, whatever he brings, debit. Third
Hmm.
thinking point. If owner takes away something,
Drawings.
drawings.
Be debited.
Drawings is always,
Debited.
Debited.
okay. If owner takes cash, so cash credit. If owner takes goods, so goods credit. Are you with me?
Yeah.
Purchase is always what? Debit or credit?
Purchase is
Debit.
always debit.
Purchase return,
Credit.
Credit.
sales,
Credit.
sales return.
Debit.
Debit.
Because purchase is an expense, it is always debit. Sales is an income, so it is always credit. Now, keeping this in mind, we will try to solve some journal entries. First 10 journal entries. Just read and solve. You'll just read and solve. Come on, first one.
Purchase will be debit purchase and machinery.
First
Debit.
thinking point is
That it's coming in.
first thinking point is
Cash bank.
first thinking point is
Cash bank.
cash bank. First, you will always think from which point of view?
Cash bank.
Cash bank.
If it is coming in,
Then it'll be
Cash
debit.
is going down.
if it is coming in, then debit. If it is going out, then credit.
Credit.
Okay. First thinking point is
Cash bank.
if it is
Then
coming in,
Debit.
Debit.
if it is going out,
Credit.
Credit.
come on. Read the first entry and tell me the answers.
Machinery purchased for cash 1,000. Miss, is it machinery debit, cash credit 1,000?
Yes, it is machinery debit, cash credit 1,000. Why did I use the word machinery? Because if you purchase an asset, you will use asset, the name of the asset. Only if it is goods, you will use the word purchases or sales. Am I clear? Now
Yes.
I want you to take 5 to 6 minutes of time and write the answers for these 10 entries. Ask me if you're getting stuck.